morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today, in spite of news about the new emerging variant of COVID-19, we're taking a look at financial markets, of course, and today we're focusing on the banking sector and one of the banking giants of the region, Republic Financial Holdings Limited. Now, the group would have, or the financial holdings company rather, would have published its annual FY 2021 earnings results and annual report recently. Lots of things to digest. Let's take a look at how the group would have performed and what investors might expect in the coming months ahead. Now, for that fiscal 2021 period ended September 2021, of course, the group would have reported an earnings per share figure of $8.02, which was a very commendable increase of 44 or 45% from the $5.54 recorded in the prior comparable fiscal 2020. Of course, a very challenging period, mainly attributable to the lingering effects of COVID. Now, net interest income for the group was pretty much stagnant, actually a marginal decline from 3.99 billion to 3.97 billion. Operating income overall was up just around 1.8% from 5.7 to 5.8 billion, but operating profits on the heels of reduced expenses did increase up 10.1% from 2.08 to just under 2.3 billion, with net profit attributable to shareholders increasing that 44.7% from 904 million to 1.3 billion TT dollars. Now, when we take a look at that revenue story, it's been pretty much a case of stability over the past 3 fiscal years, building on acquisitions, and that has been offset partially by the effects of COVID. As mentioned, we can see that net interest income had that marginal decline there from about 3.99 to 3.97 billion, with other income really offsetting that marginal decline up from 1.7 to 1.83 odd billion, and that was driven by increased fees and commissions. Net interest income holding its own despite lower net interest margins in a lower interest rate environment, but offset by growing volumes experienced by the group in terms of loans and advances. Now, when we take a look at the group's profit before tax, or PBT, by geographical segment, now we can see that overall there was a very nice bump from that 1.46 billion in fiscal 2020 to 1.94 odd billion in fiscal 2021. No major changes here. Trinidad and Tobago did post a pretty significant recovery, however, in terms of its PBT generation to the group, or contribution to the group, from 619 odd million to just around that 1 billion mark, accounting for just over 50% of the overall profit before tax for the RFHL group. We can see that there was a pretty nice recovery in Barbados from 115 to 133.6 million. Suriname actually declined in terms of PBT by about 70 odd percent from 112 to $33 million, and that was mainly attributable to the devaluation that would have taken place in Suriname, as well as some increasing ECL experiences. The Eastern Caribbean would have declined from 191 to 169 or 170 odd million. There was a very nice 10% increase in the booming Guyana economy from 178 million to 198 odd million. And the Cayman Islands, in that very light brown shade, would have actually improved from 129 to 219 million, with the bank benefiting, or the group rather, benefiting from its first full year of earnings or operating results from its recently acquired Cayman Islands operation. Now, when we take a look at the earnings recovery, it has in fact been more of a recovery than certainly outright progression. We can see that after a very challenging fiscal 2020, where earnings per share fell to that $5.54, it has bumped back up to around the fiscal 2018 level of $8.16 or thereabouts in fiscal 2021, of course, reaching that $8.02 or $8 level in terms of earnings per share. From a valuation perspective, of course, Republic Financial Holdings Limited has followed suit, as has been the case of many publicly listed stocks in that banking sector, with fairly elevated valuations. Historically, the stock has traded at around a 12.5 to 13 time price to earnings ratio, particularly through fiscal 2017 to 2019, with that very sharp decline in earnings in fiscal 2020. That price earnings ratio was pretty much elevated to around over 25 times, which is fairly high given the banking sector average has historically been around that 15 to 16 times. And it has since moderated in fiscal 2021 to around that 17 times level, still well above that historical average of that 12.5 to 13 times for this particular stock. Now, investors will have one eye certainly on a very significant change that's going to come up in about 12 months or so. And that is the case of the windup of the CLICO Investment Fund, which through the CLICO Trust Corporation holds just around a quarter or 24.5% of the outstanding shares of Republic Financial Holdings Limited. Why will investors be keeping an eye on this? Well, of course, this would significantly increase the so-called free float of Republic Financial Holdings Limited stock, and it could lead to some increased volatility for the stock price when that time comes, depending on the behavior of investors in the CIF now receiving in specie these shares of Republic Financial Holdings Limited stock in about a year's time. So certainly one particular development to keep an eye on. At a price of $138, Republic would have advanced for the year just around 2% and is trading at that price to earnings ratio of around that 17 times, below the banking sector average, but of course above, as mentioned, its historical average of around that 18 time handle. And it does offer investors a dividend yield of 2.9% above the sector average currently of 2.4%. Now, with positive drivers of geographical diversification being a very good story for the stock, and continued acquisition activity, as well as its latest foray into a new business line in terms of life insurance, those are certainly good omens for the stock going forward. Given those elevated valuations, however, and the prolonged economic uncertainty that is becoming more and more likely as new variants of COVID-19 develop, Bourse is going to maintain a neutral rating on Republic Financial Holdings Limited, or RFHL, for the time being. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773. Email us at invest@boursefinancial.com and check out our website for all of our free research at bourseinvestment.com. And of course, you can catch us in the business section of today's Bigger, Better Trinidad Guardian newspaper. Well, that's it for this week. We hope that you stay very safe, get vaccinated, take care of your loved ones, and see you next week on the Bourse Report.